Hey traders, this is Blake Morrow with Tradersummit, and I have with me once again Mr. Tommy Lackey. He's portfolio manager at Relativity Capital Advisors and also the creator of the Power Investing website. How are you doing, Tommy? Good to see you. We haven't caught up in a couple months.
Yeah, doing great. How about yourself? Really just been kind of enjoying summer.
Yeah, it is. It's summer, little doldrums going on. But look, today the markets have rallied quite substantially. We have inflation data. Looks like it might be peaking. Markets are really cheering that. And you know, the last time you and I spoke, which was back in May, you were really identifying some of the sectors and that were really beat up, that you were looking for a turn. And I'll tell you, this summer we've had a nice rally off the lows, and I think you were spot on. And now it's like, I've got to ask you, what do you think about where we're at right now?
Yeah, that's the funniest question is where it is from everybody. And I think the reality of where we're at is no one's really going to be able to tell you right this second. I mean, I hate that, but we're in a situation where we have come off the lows very well. That should have been somewhat expected. Again, velocity and magnitude, you never know when a bounce starts. That's why, again, targets can be difficult, but if you just have milestones you keep working through, you can stay with some of these moves. And it's a situation now to where I think we are up towards and nearing some of the resistance, and we're going to have overhead for a while. There's a lot of things for us to bump our heads into. However, I think it's hard not to recognize that it has been a different character of market for the last month, and it's not just summer. It's a situation where we have seen, like you said, some of the most beat up areas bought, but not just beat up areas because communication services was one of the most beat up areas, and certainly it's bounced, but it really hadn't been the magnitude that we've been looking at in some of the other areas. It's just now starting to catch on now that things are getting popular. But things like software, we talked about how hard it had been hit. Housing with like a ETF like ITB and things of that situation, that was one of the ones that was already starting to base and show some relative strength, even though it wasn't going up yet in May when we were talking. And again, that's one of the keys to relative strength. If you start seeing relative strength when nothing's going up, then it's definitely where you want to be watching when things actually do start moving. And that's exactly what we saw.
Yeah, well, I think you might have been a little bit early, but the markets have turned nicely. The S&P bounced, maybe 13, 14, 15%. But you're right. We are at a kind of an iffy area in the stock market. But I want to ask you, do you think the S&P can stretch its legs up towards the 200-day moving average, which is maybe like another 100 some odd points higher? What are your thoughts there technically?
Well, let's look. I don't really the 200-day moving average is something that everybody uses. I'm going to share my screen real quick.
Thing. Go ahead.
On a different chart, but just so you can see it, is that basically this is a triple play chart. This is a chart I put up every single day in the 65, or almost every day, not every day, under the Power Investing on Twitter. And basically, this is a 15-minute, but if we do go up to that daily chart, this is more of an RSI-based chart, which is what I tend to use, and I put a couple of moving averages on there. Now, yes, I do think there's a good chance we extend up to the 200-day moving averages, even without looking at them, just because so many different people and institutions use those areas. I do think it can become a magnet, especially when we've come this far. Now, how quickly, I don't know. And then, of course, we always have the situation. Sorry, I'm looking over in the corner where your picture is instead of where you actually, or where the camera is.
No problem at all.
So when you look at that, it's a scenario to where, and looking at this particular chart, we've seen today, we're trying to break out over here on the left side chart is the SPY. Okay, so it's trying to break out of a nice consolidation. As we flagged down here across, or kind of came across, we saw volume declining as the RSI moved into a new bull range. We've talked about this before. I use RSI a little differently from Andrew Cardwell's work, to where if it's trending between 40 and 80, that's a bull range. If it's trending between 60 and 20, that's a bear range. And we made that shift about a week and a half ago back here, right as it made that strong move. Out of this lower consolidation. So to me, that's more acting strong on the daily basis. Now, can we Can we bank on this yet? No, of course we can't. Because if we flip up to the weekly chart, we're still in bear ranges here. Moving over the 50 is what we want to see. So everything's starting to. But I use these MA bands, which is a conglomeration of some different moving averages in my charts. And we're just now starting to mount those on the weekly. So, you talk about the 200-day moving average. That's great and all, but really we need to step up a level or two before we're going to be able to see whether this can last or not. We're seeing the right kind of action across most time frames at this point. But again, it's a progression, just like with Brett. It's got to progress from these lower levels up through.
All right. Well, we are obviously getting a bit of a rally today, and like you said, it's shaping up. Well, what are some of the sectors that you're queuing in on right now that really look the best to you at this moment?
All right. So if we switch over to the Power Investing website, and I'm not going to try to pull it up and down and make you watch through all that, but basically on the universe page, which is one of the main pages I look at, as you go down the page, we have the table that has all of the subsector we've discussed before. So what's been moving? Well, mine's a 3-month relative strength, so it's going to give us what's been moving most recently. Obviously, biotech has been a huge one. This is one of the areas I think that's important to give a little bit of a sense that we might be making more of a shift than just a bounce, is that biotech was something that had been getting hit quite a bit before the bear market even started. It's been underperforming for a few years. And out of the bottom of this, not only did it bounce, we also started seeing a good bit of M&A in it as well. That's a shift. So this may be a sector that we see things shift to for a while. If we can see kind of some of that continuations, it basically just says that it got to a valuation that the markets and the institutions got much more interested than they were previously. And isn't that what investing pretty much is for all of us in reality, is trying to find the value in a particular investment? We just choose to do it by charts. Yeah. And so that's really with the RS, it's showing us what's up there. Industrial goods is also up here. I've been happy with some of the consumer discretionary type stuff. If we move up a little bit just to the sector level on the same page, healthcare really has been the leader. It took off a little while back, and it's been one that I've been impressed with. Technology obviously is back up there as well. Again, this has been one of the areas that's been very interesting because so many people talk about technology can't lead again because it led the last time. Well, we bought some into an ETF in the software a little over a month ago. Well, because it started leading. And I mean, whether the idea of having, I understand how long it led and the idea of other areas coming in, but that's the same argument we've heard about for Europe for a decade. Right. It's turned to lead, and it never seems to last long enough to make it worthwhile. Well, technology took a huge hit. A lot of things come down to better pricing structures, and then you start seeing people buy again. I don't care who it is. I just want to see that flow coming in.
That's an interesting take. When what do you see as sectors that are really underperforming that would actually give you more of a concern for the broader markets?
Well, again, if consumer staples were back up on top, that would concern me a little bit more. Real estate's back down here towards the bottom, and real estate charts don't look bad. See, that's something to think about as well. As everything of all my RS work goes back to comparing it with the charts, and the fact that real estate charts don't look bad and they're down towards the bottom, or consumer staple charts don't look bad, they're down towards the bottom. That tells me clearly that you have a level of growth that is leading right now. Now, if I switch over to my macro page on here, and this is a page that even once I do start subscriptions will always be free. We've talked before about the intermarket analysis, John Murphy's intermarket analysis, and just putting it in this relative strength table. Again, if more than a few weeks back, we saw IWM, QQQ, SPY, and DIA all move up in the upper half. And that's one of my big things. As long as our 4 equity proxies are in the top half of this list, and you start seeing things like some of your commodities, or seems like the dollar and some of that stuff falling towards and moving back down, it's a good time to be more active and more comfortable that it's worth a shot. I can't say comfortable for 6 months or a year because that's just not what I do, but it's comfortable, it's worth a shot.
Yeah, right. Well, let me ask you this, since most of your work is, regarding different sectors of the market, but do you take into account seasonality? knowing that we're coming into some of the fall months, and you might see some selling pressure come into the markets as we wrap up summer, at the end of August or early September. Do you subscribe to any of that, or do you keep it in the back of your mind and you start looking around for what might trigger some selling?
I definitely keep it in the back of my mind to what would trigger selling or things like that. And in this situation, because we are still in a major downtrend, now we've made our first higher high at this point. The question is, will we make a higher low on the major trend? And so at this point, we're still in a major downtrend. So yeah, we have to be, and we also have to understand not only is the seasonality, we're also in the scenario of election year. And we kind of have some pretty nasty rhetoric out there here and there. So, tape bombs, I think, are something that could certainly happen as we go between now and early October. And it would not surprise me because it can certainly happen, but it'd be one of those areas to where if we didn't back test a little bit of this at some point, I'm not saying it'll be tomorrow, but coming back and testing some of it in the next month or two shouldn't be surprising to anybody.
That makes a ton of sense. So, Tommy, I love your work on your power investing site. Can you tell us as traders a little bit about that and what you do?
Yeah, basically on the power investing side, what we do is we take the market, we break it down into our own 11 sectors and then 51 subsectors, and then start running relative strength scans all throughout these different levels, and also breadth work throughout all the levels. Most people keep their breadth work to the high and up to the market as a whole. Well, we feel there are 4 different pillars of relative strength. One is momentum, which we use RSI work for. The other is participation, which is breadth work. Then we have the relative strength comparatives, which tells you which is strong in a specific sector or area. That's our what we were looking at, those tables before. And then finally, relative comparatives. None of this matters if you can't compare it to the benchmark you're supposed to be using and you're outperforming. You don't want to be making new investments in stuff that's consistently underperforming the benchmark you're trying to beat.
That makes a lot. That makes a lot of sense. So, how do we get involved with the power investing site?
Okay, well, and as I unfortunately told you, took the summer off basically with power investing. You can definitely go to power investing right now and use all of the tables. You'll see that some of the charts are not showing up. I'm working with some programmers and trying to figure out that, but not quickly. It's still summer, so I'm still trying to get people back. But the charts still update every day. I mean, it's not the charts, the tables and all this update every day. And even there are pages in here that I didn't get to today, but there's a page in here, example, that has all different ETFs, alternative ETFs, all this. And then also that you can go into under that universe page that basically ranks every single stock in the universe with the same relative strength, kind of like an IBD setup, but you have 3 months, 6 month, and 12 month you can look through. And then you can click through to Trading View, as we discussed earlier, if you're a subscriber or not, and look at it through their charts. Because again, relative strength to me is all about identification. The chart is about execution.
All right. Well, Tommy, I'm going to give a piece of advice to anybody that's watching that is a trader or a portfolio manager. You should be on the power investing site. Make sure you check it out. Make sure you put your email where you can, so you can stay up to date with everything that Tommy's doing over there. And also make sure that you give him a thumbs up. Thank him for his time here today with the Tradersummit community. And Tommy, personally, I want to thank you for spending time with us and and keeping us on the right side throughout the summer, throughout the markets.
Thank you, Blake. Appreciate you having me. Have a great rest of the summer.
You do the same, and make sure you guys visit our sponsor, Eightcap, and you can click down below and get to their site and see what they offer traders globally. So, Tommy, have a great one. We'll catch up with you soon.
Thank you, Blake.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.